Dr. Leila Fourie, thank you for joining us this morning on the eve of, or on the official launch day of the investment conference. Now, you've just started. It's been a month or so that you've been in office?
Yes,
if I can call it that.
It has.
In office.
It's been exactly a month.
Exactly a month. Congratulations and welcome to the new role.
Thank you.
I can imagine you had a lot of goals and plans and ideas for this new job. What do you think you are going to bring that's going to inject new life into the JSE?
Well, I think the economy more broadly and the financial markets, and therefore the JSE, has gone through a very difficult period. We're into significant trading headwinds, both globally and locally. We've seen a number of equity players leaving the market. Macquarie left the market a week ago. We've seen very significant disinvestment from the country in the equity markets, 96 billion year to date, and contraction in equity investment across the world. This is not a local phenomenon. And so for me, the really important thing that we need to focus on in the next couple of years is really in three areas. The first area is in growth. We need to do as much as we can, both on a nation-building macroeconomic level, building relationships with internationals. We will be going to the USA next week on our SA Tomorrow conference, where we'll be working with the ministers, with all of the finance and trade ministers who will be joining us to put forward an investment case for South Africa. We're also doing a lot tangibly within the markets to try and unlock value, new trade types, new market structures, etc. We're investing in new products within the exchange. So you would know that we launched a green bond segment a while ago. We're now busy shifting that to social impact investing, which will mean that institutions can raise bonds to fund things like social projects like schools, education initiatives, etc. And we're very excited about that because we think that the growth of the exchange needs to be rooted in the economy. We need to do more in the SME space. In the pre-listings pipeline, we have more than 30% of our Alt-X or new companies that come to the JSE listing on the main exchange. So it's a really important thing to make sure that we have consistent investment in our young up-and-coming fledgling companies. And then we also want to build connections with other international centers like Southeast Asia. There's a lot that we can do in getting our data onto the screens of Southeast Asian traders and thereby creating interest for inbound portfolio flows. So we're very excited about the growth prospect, and we think I see great opportunity.
I mean, that's good to know, and that's good to hear that you're positive about the future of the JSE. And I know you mentioned that economically, or from an equity perspective, it's not unique that South Africa's having equity outflows, but it is particularly challenging in an economy like ours that we are having these outflows. How does the JSE buffer against that when you are designed to create market activity?
Yes, and our role is capital formation, and capital formation is driven by market confidence, and it's driven by sound macroeconomics and predictable policy statements. And while we may have significant challenges in our economy, and I don't deny those for one moment, we're not unique in those problems. I was in the US last week, where many of the general sentiment of the investor base was that they don't want to invest in China, they don't want to invest in the US because of the policy uncertainty relating to the trade wars. They don't want to invest in Brexit or Europe, and they are in desperate need for yield. In our economy, we do offer a high yield, and so there is significant investment interest in the country. And I think if we are able to provide solid commentary on what we're going to do with our SOEs, if we're able to provide solid commentary on what we're going to do to address our fiscal deficit, we will most certainly see inbound flows. What we should also be very proud about in the country is that our exchange punches way above its weight in terms of liquidity, in terms of market integrity. We have a IOSCO compliant, which is world compliant settlement system, which gives investors the sense that if they trade on the exchange, their trades will settle. And so we have a market system of integrity, which is the foundation of market growth.
That integrity, let's talk about that, because last year, in the last 18 months, the JSE has had a bit of a reputational knock.
Yes.
What can you do to re-energize and rebuild the confidence in our exchange?
Yes, and we have had a number of high-profile corporate events, and those are unfortunate. What we are doing is we're working very closely with industry. We're collaborating between public and private sector. We've just recently, in fact, as early as yesterday, announced the introduction of our new listings requirements for the bond market, and those are going to be going out for comment. And we're going to be putting those forward to the Financial Services Conduct Authority, who will put them out for comment. Those bond requirements will rebalance the playing fields between bonds and equities. We'll be introducing a number of listing standards that currently exist in the equity market into the bond market. Basic things like governance. Governance associated with the King Code. And so we're very excited about that. We believe that that is going to be an important catalyst for stimulating confidence. Unfortunately, at the end of the day, you can't regulate for fraud, and these situations can and do happen, and particularly so in a downturn. And it's our role as leaders of the economy to ensure that we collaborate together between public and private sector to ensure that the integrity of the capital markets is upheld in every way.
Would a revision of your listing requirements between bond and equity markets, would that mean that some companies no longer meet the standard of the JSE and would automatically be delisted?
They wouldn't be delisted at this point. The bonds that are listed right now meet those requirements. There might be some changes and some updates that are required. What we are very mindful of when we're introducing any regulation is to ensure that our listings requirements are just high enough to ensure that we have the right level of integrity and not too high that we stifle growth. It's really important that we encourage growth into the market. And so this is why we are contemplating potentially an SME environment which could contemplate slightly lower and buyer beware listings requirements.
What would a downgrade mean for the JSE?
A downgrade has an obvious, very important impact to the asset manager's mandates, because mandates are defined by investment grade or sub-investment grade ratios. So that will most definitely impact flows. In terms of pricing, I think that the downgrade is largely priced in. So even if it does happen, and I believe that I'm optimistic that there's a lot we can do to avoid that downgrade in March, even if it does happen, I think a large part of the volatility and the dislocation that one would anticipate is built into the market. So I'm not in the space of catastrophe thinking. Is it a good thing? Of course not. Do we need to improve our fiscal position in order to demonstrate to Moody's that we shouldn't be downgraded? Definitely, and we've heard from the minister, and we're hopeful that we're on the right track to addressing that.
But 40% of the JSE, about 40% of the JSE is foreign owned, right?
Indeed.
So that would have a significant impact on your bottom line.
We have had significant outflows already this year, and we see that markets do ebb and flow, and it's part of the economic cycle. And what we offer that many developed worlds don't offer is a high yield. And right now, in the low global economic environment, the investment thesis is a search for yield, a search for alpha, or a search for growth above the benchmarks. And so we definitely are an attractive country and we have a lot to offer, and we often underestimate the value that we have to contribute to global investors.
I know it feels like I'm belaboring this point, but I really want to understand how, as a JSE, we feel, or as a market, we feel like we are still attractive in terms of yield, because when you look at the JSE, trading volumes are down this year, your general income is down, small and mid-cap companies are not performing, the top 40 is not performing the way we wanted to. So how are we so optimistic?
There's no question that markets are down. But if we compare ourselves to our global counterparts, the WFE stats indicate that trading in the equity markets was down by 18%. In South Africa, we were down by 13%. And so I do believe that there is a shift between asset classes, between debt and equity. That is a cyclical thing. And we often tend to think that when we see a downward trend, that this is the perpetual, never-ending trend. But cycles do go up and down. And notwithstanding the contraction in the markets, we still do have a good value proposition to offer. We still do have yield to offer our investors, which many of the developed markets don't have. And we have a lot more certainty than perhaps the trade war is creating between those enormous two centers of China and the US.
My last question to you, what do auditors and what does the audit profession mean for the JSE? You know, the auditing profession at large has had also a very difficult period. And if the market feels like they can't trust auditors, they can't trust companies because the companies are being audited, how do they trust that the market via the JSE is going to perform for them or maintain a standard?
Auditors and all checks and balances within the broader regulatory process are crucial for the integrity of our capital markets. The integrity of the capital markets, as I said earlier, is the foundation of growth. And so it does mean that we have to rebuild that trust that was broken down by the recent events that we've had to experience. That said, we shouldn't lose sight that we've had sort of 3 or 4 events out of more than 350 listed entities. And so many of those listed entities are good corporate citizens. The unfortunate complexity with both regulation and with auditing is that it's very difficult to legislate for fraud. When fraud occurs, it eventually does bubble up, and it does evidence itself. But it takes time sometimes. And so what we really need to do is, this is not about a tick box exercise. This is about ensuring that we have the correct ethos and the correct commitment by corporate leaders to do the right thing. And unfortunately, that's a very difficult thing to write into a rule book and to maintain.